Hey there, good afternoon everyone. This is Trader Tim coming to you from eminimind.com doing a Monday market analysis video to get this week started. And it's about the close here on Monday. And as we kind of start on the daily chart, the one thing that really stands out in the last week or so, about a week and a half, is how a lot of these candles, these daily candles, have had long tails, and we've had two bullish engulfing candles, meaning the high is higher than the prior day and the low is lower than the prior day. And on top of all that, we've had some serious gaps just about every day. We've been having these gaps. We'll have this bullish engulfing candle and then a very bearish gap down with follow through, then a gap up, then a bullish engulfing, and then here we rally up to the halfway back short, get a reaction, and then start selling off again. So the last week and a half, 2 weeks have been really tough in the markets to kind of get a read of longer term direction. Part of this can be a lot of turnover where you have folks that have longer term positions. Maybe you bought, or there's a hedge fund that put on a longer term position down here at the start of the year, and they're sort of closing out up here as we're kind of up at highs. And so you can have some of that longer term price action weighing on a lot of the intraday trends. If I go to like the 30-minute chart, we've had these kind of U-shaped days where we open and then we kind of rally and then we just slide back into the close. Friday we rallied and then just slid back into the close, kind of an upside down U. Kind of the same thing on Thursday, didn't quite slide all the way back where we opened, but when you compare it to like Wednesday's trend day, it's been an interesting couple of weeks. Now I wasn't able to trade on Thursday and Friday; I was gone, but leading up to that, I'd still been treading pretty lightly, and just making sure not to get caught with it's easy to get caught in a getting off your game a little bit, and then all of a sudden, you might have a bad trade or two, or you have a couple of losers one day, and then you start breaking rules, and then you keep trading, and then you say, well, I'm only going to trade in the morning, but you have a bad morning, so you come back in the afternoon, you look for some more trades, and then it kind of leads to this downward spiral of, a big down day or just getting off your rhythm. So I've been pretty careful to certainly not overtrade, and I've been trading very lightly. Now, on the daily chart here, I've got the opposing short. I guess you really wouldn't call that the opposing at this point, because the big halfway back long here I have hasn't traded. Now, this long from the beginning of the year has a target still above us at about 3,200. And so then what I do, I have that in the kind of the back of my mind here, that this big, huge daily or even weekly long has traded at the beginning of the year, and its target is way above us. And then you say, okay, well, here we have this potential for a double top, because that's kind of what we've set into in the last couple of weeks. And so if we were to pull back to the next, from this year's low to this year's high, that halfway back is a 2650. And then in the meantime, on the way to that halfway back long, I'll be drawing up these short setups. So we could be in a series of daily shorts on the way down, and then we stop at that next halfway back long, and then maybe we gain some support, and we take off into new highs. So when I talk about like multi-level time frames, That's how I use the bigger time frames to kind of uh, give me some support and resistance levels, and they may not really come into play until a month from now. But it's important to have those in the back of your mind, and remember that, okay, what setup traded first? And at this point, it's the big daily long that traded at the beginning of the year. So if I draw up then the opposing setup to this short, the short is, we sold off. We, broke some minor swing lows, but this is still the major swing low down here, which we have not broken. And I was watching today here, so we've got the SPY. Here's the little recent swing low from last week, and then this is the sort of major swing low that I'm watching for us to break. And as I go through the top line figures, we are pretty much certainly holding this swing low from last week. The Dow is kind of at a triple bottom situation here, but on the verge of breaking. And then the Nasdaq also holding its swing low here as well as back here in March. And then the Russell, kind of similar to the Dow, almost breaking its swing low from last week, and then the pattern, like this swing low, is already lower than this prior one in early March, whereas if we look at the SPY, it's a little bit more of an uptrend where this swing low is higher than the prior one. So I'm using those prior swing lows as my reference points to help give me an idea of, is this just going to be a double bottom here like in the Dow, or a triple bottom, and are we going to bounce? Or if we actually come down and break the swing low, then it would be a bigger sign that we're going to move quite a bit lower. And so how much lower? Well, the first target would be 27.66, just using the negative 23% target from this 50%. So on the ES, that line in the sand would be a 28.02. And will we see some support at that 2800 level again, right at the prior swing low? Maybe. So I'll be watching that level. And as I always talk about, when you come down to a swing low, or when you're breaking a daily low, I want to watch for how we break that low. Do we just trade a little bit lower and then rally right away? Or do we break through the low and then immediately accelerate and dive off a cliff? Usually, those signs can give you some sort of indication of what's to come. Although in the last 2 weeks, we've had a lot of mixed signals. You have a day like this on the 13th where you get a gap down and a big sell-off, and the very next day we gap up and then break that high, put a bullish engulfing pattern in the following day, and then after the third day of rally, we roll right back over. So these daily trends have been pretty short as well. 3 days up, and then now we're in kind of on the second day down. Today's spinning top is usually an indecisive day, and the breadth and the advanced decline line, more so the breadth, mimic that with being closer to 1-to-1. But as I draw up the low to high, the opposing, you can see we did break the 61.8 by a slight bit. So the short certainly has weight at this point, and I'll be targeting 27.66 as if we can break this swing low. So if you have questions, feel free to leave them in the question box or in the comments below. Today there was a nice short up at highs right around the top of the hour where we had a high tick on the NYSE tick. And I do find the NYSE tick to be very helpful in these kind of market conditions. So we had a high tick at 57s right here. That was the high tick for the morning. And then we sold off. We really didn't have a major swing low, but these two little minor swing lows, one candle in the other direction. And then we traded at the 50% short, sold off a couple of points, about 4 points, and then came into the next long. But that's kind of just like on the daily chart, how I was just talking about how we can be trading down in shorts, and then we can be in a short, down, and then rally at a bigger halfway back long. That's the same scenario as over here, only it's an intraday chart, so it's a lot shorter time frame, where we come down, we trade at 50% short, sell off 3-4 points, and then we're trading at the long, and then that gets its support, and then the trend changes. So be careful out there. Certainly do your best not to overtrade, and if you can get through these kind of weeks where you get a lot of mixed signals and back and forth, then the good weeks, they just seem effortless, and the signals are incredibly clear after you've gone through these types of trading environments. So I hope everyone has